If you're a Singaporean investor, you've probably wondered, is it worth diving into US tech stocks like AMD, especially now that the AI frenzy is shaking up the market? Maybe you've watched prices shoot up and felt either cautious or FOMO. Today, I'm going to cut through all the noise. We're tackling 7 crucial points that could seriously shape your wealth growth journey here in Singapore. Forget generic US investment advice. This is a Singaporean take built for our local realities: CPF, SRS, SGD, and more. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering stocks, finance tips, CPF, and everything related to growing your wealth right here in Singapore. The Investing Iguana was ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just hit the 1 million milestone for number of reads and 58,000 likes. I've made over 1,000 videos with more than 600,000 watch hours as of August 2025. Plus, I break down regional and global economic trends so you know what matters in our backyard and beyond. If you're serious about taking your Singaporean investing journey to the next level, you'll want to hear this. Here's what we're tackling today. AMD. What's going on with this AI chip, darling? The OpenAI partnership. Is it just hype or a sustainable revenue driver? AMD's actual financial results and why they matter to Singaporeans. Valuation. Should you buy now with that premium price tag? Singapore angle. How CPF, SRS, currency, and brokerage access change the equation. The NVIDIA challenge. Why AMD is the underdog. Risks, rewards, and Iggy's personal take for Singaporean investors. Let's jump in. In 2024, AMD became the poster child for the AI chip boom. Think of it as the NTUC fair price of AI semiconductors. Suddenly, everyone wants a share. Shares soared more than 25% in just 1 week after their OpenAI partnership news. But as every Singaporean knows, not every sale at fair price is a real deal. Underneath the hype, what's happening with AMD's growth, and does it translate into long-term wealth? OpenAI recently locked in a 5-year agreement to buy 6 gigawatts worth of AMD chips, starting with the MI450. Analysts estimate this may drive billions in revenue. There's even an unusual twist. OpenAI gets up to 160 million AMD shares if certain milestones are hit. It's like HDB giving you a massive rebate if your BTO wins the Best Estate award. That kind of skin in the game means OpenAI is betting big on AMD's technology. But is it enough to disrupt the market, or is it just another marketing splash? As a Singaporean investor used to transparency and MAS safeguards, it pays to ask, are the rewards proportional to the risks? AMD posted annual revenues of $25.8 billion, a record, up 14% year on year. Data center sales drove half that number, nearly doubling. But before we cheer, let's check the fine print. Gross margins hit 53%. Net income, on the other hand, dropped from $667 million last year to $482 million now, mainly because AMD spent big on R&D. It's that classic Singaporean story. You pump a lot into education, think tuition, courses, hoping for future success, but the short-term hit can be painful. Now, for Singapore investors, remember currency risk. If the US dollar swings, it could nudge your actual returns. Do you want to go deeper? I've posted tables, charts, and a detailed written breakdown on our Substack page, so check out the link in the description for richer data and my step-by-step analysis. Here's the million-dollar question. AMD trades at a sky-high forward PE ratio, about 40x. That's a premium compared to your typical blue-chip stock here on SGX. The current market cap hovers at about $330 billion. Convert that at today's SGD rates, and AMD alone is worth half the Singapore market. If you're used to buying Singapore REITs for stable dividends, this kind of tech valuation may seem wild. Is it worth buying at today's price? Or does dollar cost averaging, the RSP method most of us use, make more sense? Would you buy right now or set automatic monthly buys and let volatility work for you? Can you buy AMD with CPF? No. CPFIS limits you to a pre-approved list of Singapore-listed securities only, i.e. local blue chips, REITs, and a handful of ETFs. SRS accounts help, but direct US stock access still requires a standard brokerage like Moomoo, Tiger Brokers, or Saxo. Most Singapore investors allocate up to 75% of their portfolios to overseas markets nowadays, so you're really part of a growing trend. Always pay attention to fees, taxes, and currency conversions. Those can eat your returns. But here's the upside. Global diversification means if Singapore's economy wobbles, you're not relying on one market alone for your future. NVIDIA owns the AI chip world. It's the toast box of tech. Everyone lines up, and most prefer the brand they already know. NVIDIA's CUDA software is industry standard, creating switching costs for customers. AMD's challenge, not just hardware, but building up its own software platform and persuading clients it's worth the hassle to switch. Recent launches like the MI325X show promise. But scaling's tough. For big AI workloads, AMD tops out at 8 GPUs, while NVIDIA can scale to 72. In Singapore, where we're pouring millions into AI and have become Southeast Asia's hub for tech funding, it's worth noting we're also one of NVIDIA's biggest global customers. AMD's future is tied to more than just tech. Export bans to China could mean a $1.5 billion revenue hit, and competition is fierce. The local analogy? It's like launching a kopi chain in a city full of kopitiams. You need more than good beans to win. The market for AI chips could reach $500 billion by 2028, but only if companies like AMD execute perfectly, grow their software ecosystem, and weather short-term volatility. So, what's my verdict as someone who's lived and breathed the Singapore financial landscape? AMD is exciting, and the OpenAI partnership offers revenue clarity through 2030. But current prices already bake in a lot of future optimism. For conservative investors in Singapore, I'd say wait for a better entry. Maybe if the US market corrects or AI hype cools off. If you're more aggressive, consider dollar cost averaging into AMD. Diversify and never bet the Kopi shop on one US tech stock. Pay attention to CPF and SRS rules. Use them for local assets unless your risk profile that matches direct global exposure. If you're looking to hold AMD, be ready for volatility and make sure currency movements won't wipe out gains. As Singaporean investors, our edge comes from combining global exposure with local prudence. AMD is a calculated bet, not a guaranteed win, but an option for those chasing growth and innovation. So we've broken down AMD's opportunity, risk, and real impact for Singapore investors. Got questions? Drop them in the comments. Like, share, and subscribe to the Investing Iguana so you don't miss the next round of insights. And for those who want to be first in line, premium members get exclusive early access, a full week sooner than anyone else. It's just $3 a month, about the price of one local Kopi. That gets you urgent analyses and market calls right to your inbox before the crowd hears them. Ready to become a premium member and get that crucial edge? Click the link in the description and join the Iguana Inner Circle today. For your next watch, check out my previous deep dive on how to turbocharge your CPF, hidden strategies Singaporeans miss every day. It's a must for growing wealth locally and gives you a foundation before tackling tech stocks like AMD.